2012, and I have never seen homes more affordable for the average home buyer. And there are really two basic reasons for that. One, we've seen home prices come down over the past 4 or 5 years to levels we haven't seen since 2002, 2003. But I think even more importantly is mortgage rates themselves are now lower than I've ever seen them. They're at historic lows. And you combine both housing prices having fallen with historically low interest rates, you have a perfect storm, a perfect recipe for home affordability. Okay, so let's look at some real numbers. Today, a 30-year fixed rate with good credit is 4% interest rate. What does that mean? What does 4% mean? It means that if you borrow $100,000 at 4% fixed for 30 years, your monthly principal and interest payment is $477 a month. So if you borrow $200,000 to buy a house, a starter home for a newly graduated couple or a newly married couple, you spend $954 for that $200,000 a year mortgage. You add property taxes, you add homeowners insurance, and even if you don't have the 20% down payment that's required to avoid mortgage insurance, even if you add a mortgage insurance component to your mortgage payment, your total mortgage payment is going to be about $1,600 a month. Now, that $1,600 a month is slightly more than you'd get a comparable property to rent. My guess is it would cost $1,300 a month to rent that property. So the $300 difference, where does that go? Well, number one, it goes to principal reduction of your mortgage. Every month that you make a mortgage payment, a portion of that $954 goes to repay the debt. It's sort of like a forced savings account. So in month one, by the way, it's $287. That goes to principal reduction. And month two is going to be $288. Over time, because the $954 never changes, what changes is internally how much of that $954 goes to interest expense and how much goes to principal reduction. So the primary reason to buy a home is to build wealth, because over time, if you stay in your home for 30 years, you know what? You don't have a mortgage payment and you own a home. How great is that? If you stay renting, the landlord owns the building and you don't own anything. And never mind that he gets to raise his rent every year. Whereas with a 30-year fixed rate mortgage, your $954 never goes up. So not only do you build wealth, not only do you protect yourself against inflation and rent increases, but you also get tax write-offs because the mortgage interest expense is tax deductible, the property taxes are tax deductible, so you also reduce the amount of income tax you're going to pay this year and every year thereafter. It's a compelling reason to buy real estate today.